Welcome to TheoTRADE. This is Don Kaufman. It's April 9th, 2025. Just about 50 minutes to go to the cash close here on this Wednesday afternoon. The S&P's exploding back to the upside. I mean, some of the ranges that we've seen, it's a trading session. It's got to go down in history. I mean, the NASDAQ right now, it's up 10%. That's in this trading session. And from the low of 16,735, we're actually right now, we're at 19,000. Okay. What's a few thousand handles amongst friends? All of this largely predicated on the Trump administration tweet, ultimately saying, that's it, tariffs are on hold for 90 days. All except China. And I'm looking at this and I'm like, these stocks and the marketplace is going to try to hold gains. But isn't it China that matters most? With that being said, as I kind of dig into this evening's video, I want to make a statement right off the bat, okay? In this roller coaster of a marketplace, and this is literally what I would call Mr. Toad's wild ride. And it really is a wild ride right now. In this roller coaster of a marketplace, okay, if you are not comfortable with your risk, you better love whatever you have on right now. And I'm serious about that. Okay, whether you're long, whether you're short. Look, shorts right now are finally like, that hurt a little bit. That one's going to leave a mark. Okay, but if you're long this marketplace and you're looking for the exits, this is it. This is it. Because the one comment I will make right off the bat, and then I'm going to show it to you, okay, is that the way that we're pricing right now, the risk has not, by any stretch of the imagination, completely abated. Okay, and I'm going to show you that. That is a big portion of this evening's video. And I'm not here to tell you about, like individual stocks and so forth, but I'm going to show you some areas in individual stocks that will start to make you really think twice, okay, about some of the rally that you're seeing, okay? The one aspect that I would initially say is, okay, even though the move it's unprecedented to the upside, take a look at the SPX. Ladies and gentlemen, boys and girls, where are we right now? We literally, okay, are just a few handles, that's points, off the upper edge of the expected move. And it's like laughable because in the midst of the most extreme volatility, okay, that markets have seen, literally going back to like the financial crisis, and that's how far back you have to go to see moves like this. The rally. I drew this line, okay, on Friday afternoon. We're home. We're literally on the upper edge of that expected move. So at this point, even though even I'm looking at this going like, holy, and then at the same time, I'm like, yeah, but we're doing exactly what we're expected to do. You had this expansive, like over $350 expected move. And right now we're just basically hitting it. Okay. So at this point, even though the move is just stellar, okay, it's right to where we would have expected. And if you actually bring up the QQQ, the Qs, their move is actually outside. No question about it. The Qs, I mean, it's over 10%. It's over 10%. Now, why do I still have some cause for concern? I mean, obviously, people are thinking, that's it, we're through it. Okay, it's 90 days. We're going to get a 90-day pause. Plenty of time to work out a deal. Things are going to kind of calm down a little bit out there. Normally I would agree, but again, isn't it China that matters most? You ask yourself. And then, before I even get into some of the volatility prints, which I am going to look at, I look at stuff like Restoration Hardware. And the reason I wanted to bring up Restoration Hardware, if you've actually missed this underlying, okay, basically since the announcement of not only their earnings, but some of the tariffs, this thing's been absolutely just decimated. And it's because they rely obviously on China substantially. It's up 30% today. It's literally up 30%. And I'm looking around at some of the exposure, okay, of anything related to China. And it doesn't matter. It's actually bid back with the rest of the marketplace. So what you learn over here is this is a reflexive bounce, okay, probably well overdue. It's a reflexive bounce. We've got wild short covering. And there's something that I always say in the midst of some of the most extreme volatility that you're ever going to see, okay, it's the rip back. Okay, that is the most extraordinary. And this is the rip back. I mean, look, where are we right now? We're where we were basically on Thursday evening last week. We're back to Thursday evening, still trading again 5,400. So it's a nice rip back to the upside. But the areas that you really want to watch in the remainder of the week. Okay, so obviously there could be retaliation from China. Right? They're not going to be really happy about like, look, everybody gets a break except you. Nobody likes to be singled out like that. Okay, so they're in the naughty corner at this point. That is right, China in the naughty corner. Not to poke fun at it, but look, there could be retaliation as early as this evening. We'll see if the things continue to kind of escalate there. If they do, we'll be right back in. And with that being said, so I look at the VIX, okay, and the VIX actually just absolutely got slaughtered. And everybody's looking at VIX, okay, they're like, yay, the VIX is collapsing, yay, the VIX is collapsing. And then I looked over here at the volatility futures, and okay, the volatility futures, they're coming in, and they're coming in quite nicely, okay. But we are still, okay, in an ugly position in terms of what we term backwardation. Backwardation is still absolutely, and I'm going to freeze the screen for a second, backwardation is still absolutely prevalent, which implies, okay, that there's still going to be a tremendous amount of two-sided trade. Now, the other aspect I think that really kind of resonates is, obviously, here's Wednesday, here's Tuesday, okay, where do we actually crush back to? Well, we kind of crush back a little bit on volatility, and the day is still not over. We crush back in volatility to where we were on Friday, okay. Definitely not exactly sounding the all clear, but vol, it got crushed in a decent amount. Here's the disconcerting area. The disconcerting area is down towards the bottom of your screen, the VVIX, okay? The VVIX. Now, what is the VVIX? It's the volatility of the VIX. So when people read VIX, when you're reading VIX, you're reading 30-day, and again, when you're reading VIX, you're reading 30-day implied volatility in the SPX. So it drops to 34, which is still ridiculously high. Let's not sugarcoat that. That crap is still, just over 2 standard deviations from the mean being 20. It's about 2 standard deviations out, okay? Obviously, it's off the high, which is almost 60 overnight. But the VVIX is disconcerting because it's crushing back right now, but it's still absolutely never land. It's 140. And what the VVIX indicates, okay, is that trade is not necessarily, okay, abating some of their hedges. One thing that was really wild today, I was looking at like volume and open interest in here, really caught my attention, okay. There's somebody that was actually opening positions at the 130 strike in VIX. The 130 strike, 8,000 printed there, okay, that was for June. I also caught a print in the May VIX for the exact same strike, okay, 11,600 traded at the 130 strike. Who buys, okay, volatility and like a 60 VIX? It's really disconcerting. That doesn't mean that the VIX is going to like 130. That means most likely, okay, somebody's actually just buying some tail risk just in case it does. It's like an Armageddon type trade out there, but there's some phenomenally large trades that are going off in there. Nevertheless, as we see a little bit of the vol crush, okay, and some of the risks start to abate, one of the other risks that's slightly abating, but just we're not home yet, is here in the bonds. The bond market, okay, actually bid back, meaning it rallied back, right? Rallied back, but it's still down 24 ticks, which is basically 3/4 of a point. It's still down, okay? It's still in a very troubling area, okay? We're not out of the woods just yet. And that is unequivocally the most important point that, again, that I can drive home tonight is that if you need to exit something, okay, this is it for you, like exit stage left. Because as I said to you, things may mellow out for like a day or two, but you don't know and I don't know, okay, the next tweet that's coming and so forth. Moreover, there's times like right now, okay, where trade itself takes on a life of its own. And don't even worry about the S&Ps, okay? When I say trade itself even takes on a life of its own, okay? There's a lot of talk right now that bonds and volatility, the stresses are so great that those trades being done in there are actually causing the volatility, meaning the trading in bond markets is reverberating back into the volatility of the equity marketplace. And I completely concur with that. That is something that does not necessarily abate overnight. So what are we seeing today? Okay, huge relief rally. But right now, okay, this is a rip. The rip can last a few days. I wouldn't be at all surprised, okay, to see some of the volatility crush back down. But we are far from completely out, okay, of whatever we're in right now. And again, the last thing I'll leave you with is what's going on here today. Well, as wild as the move happens to be, you're looking at like from the lows of the day, just incredible. I mean, in the SPX, this thing had a low of 4,900. It's now trading, almost 500 points off the low. It's just wild, like full on 10% move. One of the last times you see moves like this, yeah, people point to the COVID crash, but you got to go back into like October of like 2008 to really see moves that are this violent and this magnitude. But in the end, where are we right now? Well, literally, we're home. That, people, is the upper edge of the expected move over a 350 point expected move this week. Okay, and literally, we are spot on with that. Well, keep your hands and feet inside of the vehicle for the remainder of the week. This thing is still going to be wild. If you need an exit, exit now. Otherwise, okay, get ready. We're still in it right now. There is still a tremendous amount of risk. Thanks everybody for joining us here at TheoTRADE. Have a wonderful evening. Bye-bye.